So I believe the silver price is going to rise 100 to 200% in less than 12 months, probably in the last year of the bull market. The silver price is going to rise 20 to 30% per day on some days in the bull market. The gold-silver ratio is going to go to 20, probably lower. So some of you are going to say, that sounds pretty outlandish, Jeff. To which I would say, it's already happened. Silver has already done that before, and I think it's going to do it again. Well, if there is any kind of financial shock in the system, there's going to be a silver price shock, because investors are going to turn to gold and silver in the middle of this financial shock. Here's just some of the catalysts that could drive us into a financial crisis that would in turn drive gold and especially silver much higher. Look how many derivatives there are at just the 9 largest banks in the world, over $250 billion. What happens if that blows up? There's not enough money in the world by any government to bail them out. Global debt's $250 billion. There's a whole army of analysts out there that say U.S. corporate debt is the big bugaboo. That's going to be the downfall of the markets. There's a whole army of analysts out there saying, no, it's private debt that's going to be the big problem. All of those are at runaway levels. There are warnings literally everywhere. Check out this first one. This is a paper written by the Fed, commissioned by the Fed, written to other Fed governors. They're talking about money printing. They get to the end and they say, history has taught us that money printing leads to extremely high rates of inflation and often ends in economic ruin. This is the Fed itself giving us this warning. Nobel laureate Robert Shiller, I see bubbles everywhere. The bond bubble is going to end badly. The bond bubble is twice as big as the stock market. Ray Dalio, the world's largest hedge fund, a monetary policy endgame is coming. The president of the Dallas Fed right now, he said just last year, don't rely on the US dollar staying the world's reserve currency. He actually said that publicly. And I included this quote from Fidelity because this is the world's largest mutual fund holding. She actually said, we appear to be close to a bubble, but we don't know how or when this is going to end. I love these quotes, and I'm sorry for all the text, but these are what central bankers are saying after they left office, when they're supposedly more free to speak their mind, right? Janet Yellen said, soaring U.S. debt is the type of thing that should keep people awake at night. She actually said that publicly. Ben Bernanke and Janet Yellen both have said monetary policy will not be enough to fight the next recession. So in other words, lowering interest rates and printing money won't be enough to offset a recession. So what happens then? Alan Greenspan, inflation will be inevitably rise. It poses the largest threat to our economy. Mervyn King, sort of like their Fed chief over there. The world is heading for a political and economic crisis which could unleash financial Armageddon. These are central bankers actually saying this after they left office. The bottom line, ladies and gentlemen, is there are numerous risks out there. The green ones are ones that have already occurred. The red ones have not occurred yet. They're all potential, and they're all to the right because their impact would be that much greater if they take place. How do we know investors turn to gold and silver? It's predictable. It's human nature. When a crisis happens, history shows investors and citizens turn to gold and silver. And when gold rises, silver rises more. These are all the major bull markets in history, in modern history. And silver has risen more than gold every single time. So what I'm going to do here is show you the amount of global wealth that's in the world. And I'm going to put a little coin there at the bottom that shows the amount of all of the above ground silver that's available in coin or bar form. We think it's about 3.4 to 3.5 billion ounces times $18 is around 63 billion, I think, if my math is correct. But the total wealth in the world is $230 trillion, according to Credit Suisse. So the total wealth in the world is 3,650 times bigger than all of the above ground silver in investment form, in coin and bar form. So you can see, well, I'm sorry, there's not a coin there because the global wealth is too big, so let me add another one. And I'm sorry, it's still not showing up. Let me try another one here. No, the coin is still not showing up, so pardon me, ladies and gentlemen, I'm sorry, it's just not showing up. And I'm really sorry, it's still not there. There's just too much global wealth. Let me just throw a bunch in there, and there it is. I see it. Do you see it? Do you see it, everyone? Let me see, hold on. There it is, I see it. It's there. It's that bottom left. That's the amount of every single ounce of gold and silver, or excuse me, of silver, coin and bar, silver, that we know is above ground in investment form compared to the amount of global wealth there is in the world. And actually it's worse than that because they're still printing money. And actually it's worse than that because I'm not going to sell you my silver. You'll have to get it somewhere else. I mean, in a mania, people buy, they don't sell. It's going to be hard to get a hold of. It's going to drive the price much, much higher. And here's just one example of many. Some of you may know Warren Buffett bought silver back in the mid-90s, and here's what happened to the price when he did that. It rose 84%. And this was during a bear market in the middle of the nuclear 90s when miners couldn't make any money because the silver price wasn't moving at all. So what would happen if another fund came along and wanted to buy silver like that in a bull market? What would happen if two funds wanted to buy silver? What would happen if 100 would buy silver? Gee, I wonder. So that is my first strategy. You want to have exposure to silver itself. You want to buy physical silver. Now, some of you are going to say, well, Jeff, that's kind of boring. You know, stocks are more exciting. No, silver's not boring. It's beautiful. It's beautiful. Is there anyone here, real quick, raise your hand if you've never held a silver coin, a silver bullion coin in your hand. You've only bought stocks or something like that. Come up here. All right. This is a silver bull by Mike Maloney. He designed this himself. It's got his personal motto on the back. Okay, so turn around so everybody can watch your face. You ready? Here we go. All right. Yeah, it's yours. You can have it.
Thank you.
Some of you may say it's not practical. It's actually more practical. You have wealth in your hand. Instead of selling a bunch of gold, you can sell just small amounts of silver as you go along if you need just a few $100 at a time. What about risk? Stocks may be more exciting, but the risk is dramatically lower with physical silver. If you buy physical silver, you don't have to worry about management, politics, permitting, metallurgy, taxes, depletion, costs, labor disputes, share dilution, debt. You don't have to worry about any of that. So buy physical silver. Profit, you're going to make more than you think. You're going to make more on the premium, and you're also going to make more because the price rises. And I can prove it. I sold a tube of silver maple leafs over here at Vancouver Bullion Exchange in 2011, and they paid me above spot. Above spot. Okay? I don't have time for that column. Let's get onto the stocks real quick. The silver equity market is even smaller than the physical bullion market, believe it or not. This chart shows the bar on the left is Apple's cash position in their last quarterly report, $201 billion. The bar on the right is the market cap, not the cash, the market cap of all the primary silver producers. If they produce silver, they're in that bar. In other words, Apple Computer could buy every share of every primary silver producer with 11% of its cash. That's how tiny this market is. And the point, of course, is as money comes in, it's going to blow up the price. So that's our second strategy. We want the strongest stock in the market. So who is that? Of all the primary silver producers, who do we start with? Who's the strongest one? Well, we're going to triangulate. That's what we're going to do. To zero in a target, we're going to look for, use different methods to look for the right stock. We want the right metal, the right stock, the highest leverage, and the strongest performer. So first of all, do we want gold or silver? We want silver because silver has outperformed gold in every single modern bull market. So here's our triangulation method. We know we want silver. Do we want a stock, an explorer, a producer, royalty company. We want a producer because they move first, as this chart shows, okay? I'm gonna go a little quicker. So there, we've got our producer now identified for our first target. Next, we want the company with the highest leverage to silver. Institutional investors, this is one of my key points, are gonna come into this sector. Silver's rising, they're gonna want exposure to the equities of silver. They're gonna say, where can we get the most leverage to silver? They're gonna pull up a chart like this, and they're gonna look at that and say, gee, Pan American's a great company, but we can get twice as much leverage with this other company that's on the far left there, and they're gonna buy it. So there we go. We're getting closer to triangulating what our company is to start with. We want a stock with the strongest performance, right? This stock, look what this stock has done to silver. In 2008 to 2011, it rose 5 times more than silver. 2016, it rose 10 times more than silver. 2019, just last year, 5.5 times more than silver did. This stock clearly has leverage to the silver price. So we've triangulated, we've got our method figured out, right? So who is it? Anybody know? Who is our first target? First Majestic, can you catch? This is a Pegasus, also designed by Mike Maloney. This is a really beautiful coin. You ready? All right. Yes, it's First Majestic. You want to start with this company because when you triangulate and look at different ways of looking at stocks, this is a stock that clearly leads the pack. This is the one to start with. I'm not saying it's the only stock to buy. I'm saying buy this because it is one to start. It's going to be a first target. There you go. First Majestic Silver. Another reason is they have rising recovery rates. Look at the uptrend in the recovery rates this company has. And they have installed what's called a HIG mill, high intensity grinding mill. What this means is basically they can grind ore to less than the size of a human hair. So when you can grind ore that low, and they just installed it last year, very few companies in the world have this, you're gonna get higher recovery rates, which means you're gonna produce more silver. Look at the blue inset. Every 1% increase in recovery rates is an additional 150,000 ounces of silver. Their recovery rates, in my opinion, this isn't the company saying this, but in my opinion, their recovery rates are gonna be over 90% this year. So our third strategy is we want to buy a group of stocks. We don't want to buy just one, we want to buy a group of them. So are we going to try to buy our own group, or are we just going to buy a mining ETF? Let's try to buy our own. So how are we going to determine who the best ones are? Well, first of all, we want to buy developers. I love buying developers because they get re-rated as they become a producer. So maybe some of you have seen this chart before. What does CD stand for in this chart? Anybody know? CD stands for construction decision. When the company says, we have a deposit, we think it's economic, we're gonna build a mine and we're gonna produce metal. If you buy at that point and you hold to, what's FP? Anybody know? First pour, very good. Construction decision to first pour. This research has actually been done by Louis James, an independent speculator. He was the first one to actually comprehensively do a study on this, going back literally decades with these stocks. And he showed that if you buy from construction decision and you sell or take profits at first pour, you have a 90% chance of a 90% return in the stock. That is the pre-production sweet spot. That's when you want to own the stocks. The second thing is M&A targets. And the reason is because they're going to have to do M&A. This chart is the average grade of the 12 largest silver deposits on planet Earth that are currently in operation, the 12 largest, whether they're a primary silver producer or not. Look what's happened to the grades. As mines mature, grades roll over, they're going to have to do M&A just to keep up. M&A is going to happen, and this chart kind of shows it. The green line is the cost of M&A. The red line is the cost of exploration, doing it yourself, buying land, hiring geologists, etc. Look what happened on the far right. The cost of M&A has just gotten cheaper than the cost of doing it yourself. So now not only do they need to do it, they're going to be financially compelled to do M&A. So what are my best basket of stocks in these categories from these bases? Here you go. In the developer and sweet spot, Silvercrest Metals, this is one of my personal largest holdings, it in First Majestic Silver. Mag Silver and Alexco are in the sweet spot right now. They will be in production by the end of the year, but they are buys right now. Those are ones to look at. On the producer side, first Majestic, of course, and there's why, and the arrow's a little off, but recovery rates are going to go up. First Majestic, in my opinion, will be a first target, so I would get exposure to that stock. Endeavor Silver, they cleaned up a couple issues they've had with mines. They're going to increase production dramatically, maybe as much as double over the next couple of years, so I would buy them. Also in that chart of leverage, they were the stock that had the second highest leverage to silver. So First Majestic and Endeavor have extremely high, or actually the highest leverage to the silver price. And other institutional investors are going to see this, they're going to come along and they're going to want to buy those stocks. On the Explorer side, I'm not terribly familiar with Discovery Metals. I do not own that one, full disclosure, but they look like they're onto something big down there. Just be a little cautious because they are near where all the cartel activity is taking place. So ladies and gentlemen, I can tell you that we are primed and ready at goldsilver.com. Mike Maloney, myself, the whole team there, we are gearing up for what I'm calling a silver price shock. I believe it's going to happen for the reasons I've outlined, and here's how we're preparing. Mike Maloney and I are writing a book right now. There's the title. It should be out by this summer. If you sign up for our newsletter, you can get all of our research and Mike Maloney's videos before it's released to the public. And we have free storage right now. You can get free storage. You can try it out. A lot of investors are telling us how convenient it is, how much they like it. And if you don't like it, you can, sell or take delivery. And there's my Twitter account. So I have one coin left. It is a silver bull with Mike Maloney's personal motto on the back. I'll give it to anyone in the back who could tell me what his personal motto is that is on this coin. And it's a great motto. All right? Thank you, everyone.